Welcome to the third module of our IAS number 21 e-learning course. In this module, we are going to cover the principles and factors that influence the determination of the functional currency. We will also explore in this module some examples and case studies in order to illustrate the application of these principles. Now, let's start by understanding firstly the fundamental principles that guide the determination of the functional currency. So one of these principles, as we explained before, that we need to depend on the primary economic environment in order to determine the functional currency. Because the functional currency is not the currency of your home country. The functional currency is the currency that relates to the primary economic environment. So what is the primary economic environment? The primary economic environment asserts that the functional currency is the currency of the country whose economic environment will influence the entity's operations the most. So as a key factor in the functional currency determination is to identify the main sources of revenue and the currency in which the significant operating expenses are incurred. So this is how to determine the primary economic environment. Just look at the main sources of revenue and the operating expenses or the significant operating expenses that you incur in your company. The next principle to consider when it comes to primary economic environment, as we explained in the previous module, is to look at the cash flow, whether this cash flow are in or out. So the cash flow patterns here emphasizes the importance of the currency in which the entity generates and expends cash flow. And principle number 4, when it comes to determining the primary economic environment, is to look at the financing sources. And these financing sources can be considered from capital or can be considered from loans or borrowing. So the currency in which the financing is obtained can also influence the functional currency determination. Let's take an example. Let's assume that XYZ company from our previous module have the following information. The main sources of revenue is 70%, and this 70% all are from euro. So 70% of the revenue are in euro currency. And the operating expenses and financing are their respective local currency. Now, when it comes to the application of the principle, we are going to follow one by one. The first principle is to look at the primary economic environment. This primary economic environment, meaning that the influence coming from the European markets, because most of their revenue are generated from the European markets. So the primary economic environment here coming or stated that it will be influenced from the European market. Secondly, look at principle number 2, which is related to the main sources of revenue. And as you see, euro is the primary revenue currency. The third principle that you have to consider to assess the functional currency is the cash flow pattern. Evaluate the cash flow in euro, whether they are in or out. Finally, look at the financing currency. So consider the currency of the significant financing, either from capital owners or from borrowing, such as loans. Now let's consider another example for Acme Company. Acme Limited Company operates globally and significant revenue in Japanese yen and the operating expenses primarily in US dollar. The financing obtained in euro. So as you see, different currencies. So this is the primary economic environment. And as you see, this is the main principle that we have to use or to have to consider when it comes to the estimation of the functional currency. And as you see, it's really challenging because each principle has a different currency. So when it looks at the primary economic environment, you will find that it works globally. And when you look at the revenue, you will find that most of the revenue coming in Japanese. When it comes to operating expenses, primarily spent in dollars. And when it comes to financing, they got the financing in euro. So it's very challenging here. So in such situations, what should we do? So let's analyze it again, step by step. Firstly, we need to start with the primary indicator related to the revenue. So the main revenue, in this case, coming from JPY, which is Japanese yen. And this is a strong indicator that JPY could be the functional currency because it comes in the revenue. The second variable to consider is related to the evaluation of the operation or operating cost and expenses. So most of your expenses are in this company are in US dollar, correct? Which raises the question about the functional currency. But if you are going to wait between revenue and operating cost, revenue usually carries more weight than cost. So in this case, the GPY will overweight the USD. Then the third factor or variable to consider is the analysis of the cash flow pattern. If the cash inflow, which is collections, are mostly in GBY and the outflow payments in US dollar, then check which has more influence on the day-to-day operations. Number 4, consider the financing currency, which here in this case is a euro. But careful, because it's not decisive by itself unless the financing drives operations or is long-term and highly influential. Then we need to assess the currency influencing the pricing and the cost structure. So if companies set the prices or selling price based on the GPY and operate in a GPY pricing environment, so this will strengthen the case for the GPY itself. So at the end, let's weight all of the factors together. Based on the previous explanation, revenue and pricing and cash flow are all denominated in GPY, and the Japanese yen here will be the most influential. When it comes to the expenses is in US dollar, but still this is less influential compared to the GPY because GPY include revenue, pricing, and the cash flow. When it comes to the financing, which is in euro, this financing in euro is only a supporting indicator. So the conclusion here is the functional currency will be GPY because revenue, pricing, and the cash inflow denominate Acme financial and operational environment. So to summarize, module number 3 has provided an in-depth explanation of the principles and factors influencing the determination of the functional currency. In module number 4, we are going to extend our discussion to the next crucial step, which is the exchange rate and the currency conversion. Join us in the next module.